This podcast is sponsored by S&P Global Market Intelligence, celebrating an American tradition of community banks where neighbor serves neighbor. With S&L Banker, you get control of your data, financial reports are directly connected with clear, actionable metrics, so you can better serve your community. Learn more at spglobal.com/SNLBanker. Welcome to the American Banker Podcast. I'm Penny Crosman. We're here today with Brett King, who's a provocateur, author, founder of Moven Bank, Challenger Bank, and also host to the weekly radio show Breaking Banks, and author of several books, including his latest book, Bank 4.0, Banking Everywhere, Never at a Bank. Welcome, Brett. Thanks for coming.
It's great to be back in the studio, Penny, with you, and thank you again for having me.
Sure. So bankers always worry about Amazon and Facebook getting into banking, taking over their business. You feel like the worry could come more from companies like Alipay and Tencent in China. You tell me a little bit about what some of those companies have done and, you know, what is so smart about their strategy, and could that be replicated here, do you think?
Yes, it could be. There's reasons why Alipay and Ant and those guys have been so successful in China so quickly versus what's happened in the US. I'll get to that. But to sort of broadly answer your question, it took, my Bank 3.0, which was sort of the last big banking book. Obviously, I did Breaking Banks in between and Augmented. But when I wrote Bank 3.0, it was fairly clear that mobile was changing customer behavior. So that was the core focus, how mobile was going to change the way we interacted with banking. I didn't know what Bank 4.0 was going to be. I didn't, what was the next big paradigm that was going to change banking. So it took a number of years for really that to emerge. And to put that in context, when you look historically at the most innovative technological leaps we've taken as society, they tend to come not through small innovations over lengthy periods of time, but big injections of technology that change behavior or change the way we do things on a daily basis quite quickly. So the introduction of the automobile, the introduction of the telegraph and then the telephone, the introduction of electricity, these things created massive changes, changed the way economies were structured. For the car, you have to now build roads, you have to have laws, you have to have gas stations to put gas in the car. So, wide-reaching changes. So I looked for evidence of that in financial services, because if there was evidence of that, then it was going to produce more rapid, jarring change. What I found was the fastest scaling, fastest growing, most impactful financial services changes we're seeing are coming out of emerging markets where we're banking the unbanked and we're using technology at scale, using network effects, social media, and other platforms like Alibaba and Amazon, where there's already billions of customers, accessing those platforms and just converting them onto new sort of financial services paradigms.
You also talk in your book about first principles design. Can you explain your thinking about that, and why would that be important in this industry? So
you've got two basic design approaches when you look at innovation. One is where a new technology comes along, like mobile, smartphones, and you adapt your business to that technology. So if you look at the most recent changes in banking, whether that's internet banking, whether it's mobile, now with voice technology, most banks see that as a channel, an iterative approach to the branch model of banking. We take the same products we've had in the bank branch, and we now just push those out across these new digital channels. Whereas when you think about first principles design, a first principles thinker will say, let's start from scratch. If we were going to design the banking system from scratch today, what would it look like? So good examples of first principles thinking are Steve Jobs with the iPhone. He didn't take the Motorola Flip or the Nokia banana phone and iterate on that. He said, how we design a multi-touch, internet device that also can act as a phone. And that became sort of the defining moment where every phone after that had to look like an iPhone, essentially. Mm-hmm. Or Elon Musk with SpaceX, where he's been able to reduce the cost to orbit by 95% from the days of the space shuttle by starting from scratch with rocket design and building reusability. So they're examples, but when we've tackled like the mobile, and we looked at mobile payments as an opportunity, you've got two broad approaches to that. So in the West, what we've done is we've shoved a plastic debit card inside the phone. And we've said, here we go, you've got Apple Pay and Samsung Pay. You can even see your plastic card inside the phone. So we've basically just iterated on the card model. Whereas in China, where they did 17 trillion in mobile payments last year, and it's created a rapid cashless environment in urban centers in China. Like, such a change over 3 years, it's incredible. But they didn't do that. They didn't take the debit card model. So when you use Tencent WeChat or Alipay in China, you don't necessarily need a bank account at all. You don't need to go to a branch and open a bank account and get a plastic card and sign a piece of paper, a signature card to open an account. You effectively can come into that ecosystem without that. They didn't require point-of-sale infrastructure. They didn't require all of those things that we currently have to enable mobile payments. But they didn't have a lot of legacy behavior either, right? They didn't have people writing checks for landlords, and they didn't have a big debit card, credit card adoption. So it was easier for them to create momentum around that. But so you've got two very different approaches to mobile payments. In the US, it's iterative, it's designed by analogy. In China, it's clearly first principles thinking. How do we use a phone to make payments? Not based on anything that we've done in the past. How do we just use this vehicle?
Of course, they had an advantage because they didn't have this huge credit card infrastructure that everybody uses and so used to. So if a company is going to try to strip back to the first principles, do they need to hire different kinds of people, like more creative people, or somehow people who can think beyond, what we see around us?
No, that's a great question. So in the book, I talk about, I say, I often get asked this question about what do we do next? If you're a CEO of a bank, and I say, well, I happen to. But so the most obvious thing is, if you're going to make this transition, whether or not you're going to try some first principles approach to, say, some specific product design or something like that, or whether you just want to go down the digital transformation route, the first thing you got to do is stop hiring people with banking experience, right? Because you need to start thinking differently about innovation. The problem with having banking experience is you will tend to iterate on the branch model. Even though you can make it frictionless or less friction involved, you'll still be your decision making will be framed by the way you've built financial products and services in the past. What we're seeing, again, the fastest growing financial services initiatives globally are those where they're stripping back the product layer and they're surfacing the core utility of the bank. So if you think about retail banking, how many products was like HSBC had 50,000 investment class products when I was working for them back in the noughties, right? But if you actually think about it, retail bank has three core pieces of utility. The ability to store value. Sometimes those value stores come with interest, sometimes without. The ability to move money, make payments and so forth, and the ability to access credit. So when you take that from a first principles design perspective, you'll say, when do people need to use credit? And what are the scenarios or use cases where this is most acute or where this is a need? Then how do we get them the credit in real time to solve the problem they might be experiencing? Like they're in a grocery store, they get to the checkout, they swipe their debit card and they don't have enough cash to buy their groceries today. Now, it's no good sending them a credit card offer because they're not going to sit there at the checkout filling out a credit card form and then waiting for you to approve it 7 days later, right? You've got to deal with that in real time. So instead of taking a product we had in the branch, if you strip away that thinking and say, how do we solve this problem while they're standing in the grocery store, you might come up with a very different experiential design. So you need data scientists, you need behavioral psychologists, you need experienced designers. Maybe you might throw in some AI and machine learning. You need community advocates to help them, get permission to use their data in these scenarios. All of those aspects are very new skill sets for banks that you can't necessarily draw on the existing pool of employees for.
You mentioned AI. In the near term, what would you say are the key emerging technologies the banks should at least be thinking about? And again, it may just be iterative do what they already do in better ways. But
Sure.
Which emerging technologies are you sort of most enthused about right now?
So the obvious one, which will tick the boxes both in respect to improving friction for customers and reducing costs for the organisation, is what is commonly referred to as RPA, robotic process automation. Right? So to illustrate this, the example I use in Bank 4.0 is Goldman Sachs and UBS's work on the trading floor. So, in 2000, UBS had a trading floor out in Stanford, 5,000 square feet at least. Thousands of traders out there. Today, that is empty, because essentially what UBS worked out is that one coder, that could build an algorithm, could replace 5 traders in terms of, those guys on the trading floor. So the trading businesses have had massive impact around this sort of robotic process automation, order taking, buy-sell orders, processing of that, taking instructions from clients, even in email, reading their email and being able to do a buy-sell order off that on an automated basis. So that's one area. There's a lot of areas in banking, fraud management, identity, all of these things which could be automated, and you're going to need to automate those things if you're going to be able to fulfill customers' demands in real time, which is where all this tech is taking us. The other elements of this really come down to the role that financial services have to play in our lives in the future. And I think really at the core of this is the concept of advice in financial services. And as you start thinking about advice being real time, low latency, 5G environments, voice, smart assistants built in our phone and so forth, the advice is actually quite different from what you'd expect from a bank today. So if you walk into a bank for advice today, like, okay, I've got this cash that my rich uncle left me, and I need to invest it. What advice do you get from the bank? They say, well, you need this asset class or that asset class, right? What's your investment risk tolerance? You need that investment product or that one. If you're planning to buy a home, you walk into a bank, they say, you need this mortgage or that mortgage. So the advice is actually fitting a product that the bank has to your needs at the time, sort of a complex selling process. But the advice in a real-time AI environment is going to be much more personalized. You'll be able to say, hey Siri, can I afford to go out for dinner tonight? Hey Siri, what do I need to save each month if I'm going to be able to go to Thailand for the summer, right? And that sort of basic AI capability built into the bank account, I think, is going to be sort of baseline capability in the middle of the next decade.
I think a lot of banks are building that, but I think, and there's a little bit of, Bank of America has started rolling out Erica state by state.
Right.
But I think there's still a lot of fear that the bot or the virtual assistant will give advice that is off the mark or not very good, just because it hasn't been tested in unlimited, scenarios, and machines don't always understand context the way a human would. They can have a very different
Sure.
way of analyzing the same kind of data. Do you think they're appropriate? Is the caution appropriate, or is it smarter to just kind of move ahead and try it and let it fail and learn
question.
from that?
The reality is, if you're approaching this in respect to any normal technology, you go through these user acceptance testing periods and you test it out and you'd refine it. But AI is improving at such a rate so quickly in terms of its ability to learn, absorb data and apply that you can't really apply those same types of technology testing regimes that we had for technologies in the past. The difference is AI can learn. And so the only way for it to learn is to be thrown into scenarios where it can absorb the data and get the behavioral experience to do that. You do need a good process of, and this is where the machine teaches, come in, the guys who can guide the machine learning process, figure out what is the right data it should be looking for, and trying to understand that context. But as we're talking here today, the Mary Meeker Internet report just came out. I know it's if you look at that, one of the key examples of this type of growth is the ability for AIs to recognize speech. That we were working on that for years and years. Kurzweil was working on that like 25, 30 years ago. But the rapid progress that's happened in just the last couple of years is just insane, how quickly that these algorithms have got really, really good at this. And that's a measure of sort of the computing power, being able to apply it, but also these core principles around AI learning.
So it's getting better and better. Yeah. And certainly if you work with a vendor of virtual assistants, they're taking everybody's results and putting them together so everybody can learn from everybody
Correct.
else. At least some of them do that.
Yeah.
So theoretically, they could get smart very, very quickly.
And that's why I think actually that while I think from a learning perspective that stuff like Erica and home-built or in-house built initiatives like this are useful for learning, ultimately the voice OSs that we'll come to rely on, the smart assistants where this type of thing is built in, will be sort of platform-based.
You also talk a little bit in your book about the need for digitally native regulation, which is really interesting because certainly some of our laws, in the banking industry are 100 years old or more. Do you think that there's a will and a capacity in Washington to produce digitally native regulations?
Look, I think they're thinking about it. One of the examples, obviously right now everyone's talking about privacy and data. We've got GDPR coming out in the UK and so forth. I mean, if you had produced legislation like GDPR in the 1960s, it wouldn't have made any sense, right? So it's influenced, heavily by data. Having said that, we are in a period of time where we're sharing more data than we could ever have imagined. I mean, you as an individual probably share more data than the entire world captured, in the 1960s, right? You do that on an annual basis. So it's pretty mind-blowing to think about those sort of comparisons. And obviously, the laws that we have are really not robust enough to cater for these things. We've seen it in multiple scenarios. Just even discussion about the US election, the midterm elections, and potential manipulation and things like that. If you look at it from a constitutional law perspective, the founders never would have anticipated that type of mass manipulation, based on technology like we have today. So we do need that. But the bigger issue is not just the laws. It's actually the fact that if regulators are going to do their job properly in the future, they're going to have to become technology organizations, maybe even more so than the banks. One of the areas, I know we've talked about it before, money laundering, right? So, Joanne Barefoot helped me write the chapter on RegTech in Bank 4.0. But we looked at it and, we spend hundreds of billions of dollars a year globally in terms of the banking and the regulatory, community to stop money laundering. And we're effective at preventing about 1% to 2% of money laundering globally. We're appallingly bad at being good at AML. And so if you look at this problem from a first principles design perspective and you said, how are we going to stop money laundering in the future? Well, you wouldn't do any of the suspicious transaction reporting and the FinCEN and all that sort of stuff we do today. It'd be a data problem. You'd say, let's track all of the flows of capital in and out of the country and in and out of bank accounts. We'll trap those, we'll monitor those transactions, and we'll look for network activity that shows that a fraudster in Eastern Europe is suddenly doing all of these attempts at money laundering, with transactions that would fall under the $10,000 suspicious transaction limit. So you'd monitor traffic, but you do this with AI, right? Now, think about what it would require for a regulator today, structurally, in terms of laws, in terms of data capture capability, in terms of data residency regulations, partnerships with other jurisdictions, all of those things to successfully do that. We're some time off being able to see that.
It's a huge technology problem. I mean, I think we have an Office of Financial Research that theoretically is set up to watch everything that's happening and catch fraud and cybersecurity threats and whatnot. But I think, as you say, it doesn't quite have the resources yet to do all those things that it's supposed to do. You also talk in your book about embedded banking. What is that? What are some examples of that?
So this is really key to sort of the Bank 4.0 paradigm. Why I use the subtitle "Banking Everywhere, Never at a Bank," is that if you follow logically. And this is where, as a futurist, you're always looking for trends. And if you look at what's happened with internet banking and mobile banking and the technologies we've already introduced into banking, there's been a lot of pressure on friction. Let's reduce the friction. So if you reduce the friction down to zero, right, or as close to zero as possible, then what you'd have is a bank that knows exactly what you need, when you need it, and can provide it for you in real time. Right? And so the technologies like Alexa, Siri, the voice-based smart assistants, in 7 years or so, augmented reality smart glasses and technology like this, your personal AI embedded in your home and your car, these technologies are going to be real time. And so the best way that banking is going to work in this technology-based world is that it can respond to your needs in real time. So banking just becomes part of your ecosystem, as will health, for example. You wear a smartwatch and it'll tell you that you've got to go see a doctor because your heartbeat's irregular or whatever. Whereas in the past, we have to wait till we got sick and then we'd say, oh, we better go see a doctor. The same principle with financial services is that the financial services organizations that really grow rapidly in the future will be able to deliver revenue in real time. They'll be able to scale up to millions of customers very, very rapidly for their competency, and it will solve the problems that you have when and where you need it. So I just see technology creating banking as sort of a ubiquitous thing that's built into your life through that layer, and you won't even think about it. So you certainly won't think, oh, I need to buy a home, I better go and see someone at the bank. You won't think like that in the future. That capability will just be there. You'll have the options available to you.
Brett King, thanks so much for coming in today.
It's been great to catch up again, Penny. Thanks for having me.
If you enjoyed this podcast, you should subscribe to AmericanBanker.com for analysis and insight on the financial services industry that you can't find anywhere else. And just for AB Podcast listeners, we're offering a deep discount. Go to AmericanBanker.com/AB Podcast for your exclusive discount code. That's AmericanBanker.com/AB Podcast.